Welcome to the first educational video of this sniper course. In this video we're going to discuss market structure. When it comes to sniper entries, market structure is the single most important part of this strategy. There are signs within the structure that will tell you where price wants to go, so in this video I will show you these signs. I will break down market structure into multiple videos, showing you different entry styles and different examples in each video. You just have to stay focused. Trading on the 1 minute time frame can be very intimidating because everything happens so fast. Some signs will only give you a few seconds to react, so if you're not paying attention and you miss it, it may be too late for you to enter and your 2 pip stop loss sniper entry becomes a 20 pip stop loss trade with much lower risk to reward. Also, if you're trading on the 1 minute time frame, you have to be very careful where you take your profits. The reason I called this course a sniper course and not a scalping course is because your 1 minute scalps can turn into swing trades if executed in the right place, so that's what I'll try to teach you. But if you're aiming to turn your 1 minute entries into swing trades every time, it's not going to happen. So in most cases you should work within the structure, and if you get even the smallest hint of price coming back to take you out, don't hesitate and take your profit. Also, if you're too focused on the 1 minute chart and you miss track of the bigger picture, you can get yourself into a streak of unnecessary losses. Let me show you some examples now. Even though we're trading on the 1 minute, you can't forget to keep track of the bigger picture. So let's start from the 1 hour time frame. This is what we have. Price sweeps this high's liquidity and consolidates. Understanding that price moves from zone to zone, this break of the high alone tells us that the price should at least come down into this area of demand before continuation. Now we can go down into the 15 minute to look for signs in the structure. This lack of volume indicates price reached a peak and is ready to reverse. We get this final push higher, sweeping all these early sellers, and the volume increased. This suggests that the majority of the sell orders were opened here and were ready to go down. This is the exact thing we talked about in the volume video in our swing trading course. Let's keep going down. This is the 1 minute time frame. Around this area here you should already know that the price turned bearish, so the only idea in your head is to short. You have the initial sweep of liquidity here, but the price never came down to break any structure points here, so no trades yet. You have the second build-up of liquidity and the price sweeps it and comes down below. This is our sign. The bears are now in control. Once you get more experience and you start building that sniper intuition, you could probably find multiple entries here, before we even broke this structure, because you had a clear change of character here and a sweep of the order block. But for your account safety, I will focus on confirmed entries. When you're swing trading or day trading using the same concepts, you're always expecting the price to mitigate the initial zone that the price reversed from. It's not always the case when it comes to the 1 minute time frame. In fact, you will notice it doesn't even happen at least half the time. In this case it didn't. Which is fine. Just follow the structure. Using the same concept as you would here. This build-up of structure is the next area you expect to be taken out. You also have this little inefficiency left above. That's your zone to enter from. And you set your stop loss above the previous structure point. Even if we were to come back and mitigate this supply zone, I would still enter here and take the 1% loss. Because you never know what will happen, and I would rather take the risk and be in the trade that goes with my bias, than wait for the perfect sniper trade which may never happen. With our risk to reward, taking a loss is not a big deal. You can even go a step further and only enter trades at 50% of your zones. The reason we do this is because different brokers have different prices. Also, the price on your TradingView chart will probably differ from your MetaTrader, so the 50% is like an average. We went from an 8 pip stop loss to a 6 pip stop loss. You can use the same concept to add more entries. You have this point of structure I would look to enter from, but the price never reached it, so let's just follow the structure. We get a break of structure, and price left a supply zone for us to enter from. If you waited for the price to mitigate 50% of this supply, you would miss the trade, which is also fine. It happens, but you can just enter as soon as price enters your zone. I would probably miss it, so I'm not going to put a trade here. But then after another break of structure you get this build-up of liquidity. That's your trade. The momentum picks up and we finally get a strong push to the downside. Usually you will notice the price behaves in a similar pattern. Once the high is created, the price is slowly creeping down, breaking structures, giving you multiple opportunities to enter. This is also the market makers stacking up their orders. Then you have a strong push in one direction, followed by a more volatile period of price jumping up and down. If you were looking to add more trades, you do not enter anywhere here or here. This spike in volume also tells us that price may reverse, like it also did here. But that's nothing to worry about because the bias hasn't changed. If this high was taken out, it would be a sign that price may want to come up into the highs, but it didn't, so the bias stays bearish. You want to wait for the price to cool down and give you a confirmation of continuation. We had this high, respect this previous area of supply. This is our sign of continuation. The price came down, and following our previous concepts you would enter at this break of structure. This rejection after our break of structure also gives us another confirmation to enter at this candle with a much smaller stop loss. Now we're down to a 2.2 pip stop loss. And all you did was follow the same concepts all the way down. Again, we had this period of accumulation with multiple opportunities to enter. Strong push to the downside, so no trades taken anywhere here. With price slowing down and mitigating this area of supply where you could have entered from. In this case, the 50% of our zone would have been the perfect entry. I haven't set any take profits yet, so let's zoom out into the 5-minute. Because the overall higher time frame bias is bullish, all this here is counter trading. I've mentioned this is my swing trading course. If I'm counter trading, I wouldn't aim to target the lows. I would target this lowest point in structure, which has a nice demand zone for us to use as the final take profit. Which, if you held all these trades, it would have given you a 1 to 10. 1 to 16. 1 to 13. 1 to 25. And a 1 to 6. That's a total of 1 to 70 risk to reward. All within the span of 12 hours. There was a lot more entries you could have taken. I just showed you the clearest ones, and I'm not saying you would have caught all these trades. I'm just showing you what's possible if you read the structure correctly. But even if you caught 1 or 2 trades near the top with a small enough stop loss, that's an easy 1 to 10 trade.